Life insurance policies, they can feel kind of overwhelming, right? Like you're wading through this maze of dense legal language. But here's the thing. Hidden in all that fine print, there are these clauses that aren't there to trap you. Nope, they're actually there to protect you. So today, we're going to dive in and demystify the whole thing, breaking down the standard provisions that are really the backbone of your policy.
I mean, it's that classic question we all ask ourselves whenever we're about to sign some super complex document, right? What's really hiding in the fine print? Are there loopholes, any hidden catches I should know about? Well, we're going to pull back that curtain and show you exactly what it all means.
And here's the surprising part, the part most people don't realize. These aren't traps at all. They're protections. In fact, most of these standard provisions are required by state law, and they exist for your benefit. They're all about setting clear rules for both you and the insurance company, making sure the whole deal is fair and predictable. Think of them as your built-in safeguards.
All right, first up, let's talk about the foundational clauses. These are the ones that basically lock in the agreement, creating what you could call a sealed pact between you and your insurer. Okay, this one is absolutely crucial. It's called the entire contract provision. And what it means is that the policy itself, your original application, and any of those special add-ons, they're called riders, that whole package makes up the complete and final agreement. That's it. So the insurance company can't just pull out some old brochure or another random document later on to try and deny a claim. It's all right there in the contract. What you see is what you get. And here, you can see the actual language you might find in a policy. It seems so simple, right? But that one little sentence locks everything in. Once that policy is issued, the insurer can't just change the rules of the game on their own. It creates this legally binding, self-contained universe for your agreement. Now, any good contract is a two-way street, and life insurance is no different. That's where the consideration clause comes in. It's all about what each side brings to the table. So your part of the deal, your consideration, is paying that initial premium and, of course, being truthful on the application. And what does the insurer bring? Their consideration is that rock-solid promise to pay the death benefit when there's proof of loss. It's a balanced exchange.
Okay, but what if there's a mistake? I mean, we're all human, right? What if you accidentally messed something up on that original application years ago? Let's take a look at how policies are designed to handle these kinds of, inevitable human errors. This next one, this is a huge one for your peace of mind. It's called the incontestable clause. Basically, it gives the insurance company a limited window of time, usually the first 2 years, to investigate and contest the policy if they find any major misstatements or even fraud. But here's the key. After those 2 years are up, that's it. The policy becomes incontestable. It's secure. They can't come back and challenge it. So let's take a common example. What if you get your age wrong on the application? It's a pretty easy mistake to make. Or, hey, maybe someone was a little fuzzy on the details to try and get a better rate. So does a mistake like that just void the entire policy? Well, thankfully, the answer is no. There's a provision for this called the misstatement of age or sex provision, and it has a really logical fix. So here's how it works. First, they discover the error, which usually happens when a claim is filed. Next, the insurer goes back and calculates what the premium should have been for the correct age. And finally, and this is the most important part, they don't cancel the policy. They just adjust the death benefit. They figure out what the premium you did pay would have bought you at the correct age, and that's the new benefit amount. Okay, let's put some numbers to this to make it super clear. Imagine a guy, he's 35 years old, and he buys a policy with a $10,000 death benefit. But when he passes away, they find out he was actually 40 when he first applied. So the insurance company does the math and figures out that for the premium he was paying, a 40-year-old would have only gotten an $8,000 policy. So that's what the beneficiary receives, $8,000. See, it's an adjustment, not an outright denial. It's pretty fair when you think about it.
All right, so we've covered mistakes. Now let's talk about provisions that are designed for when life, throws you a major curveball. These clauses are there to handle some of life's most difficult and unexpected turns, everything from financial trouble to profound personal tragedy.
I mean, we've all been there, right? A bill just slips through the cracks. The grace period is your safety net for exactly that situation. It typically gives you an extra 31 days after the premium due date to make your payment, and your coverage stays in force the whole time. And get this, if the insured were to pass away during that grace period, the death benefit is still paid out. They just subtract the premium that was due. So it's really important to see the difference here. The grace period is all about preventing a lapse in the first place. But what if you miss the grace period and the policy does lapse? Well, that's where the reinstatement provision comes in. It lets you recover a lapsed policy, usually for up to 3 years. Now, there is a catch. You have to pay all the back premiums you missed, and you'll have to prove you're still insurable. But the huge plus is that you get your original policy back, often at that original lower premium rate. Okay, this next one is a very sensitive topic, but it's a necessary part of every policy. The suicide clause is there to protect the insurance company from the tragic situation where someone might buy a policy with the intention of taking their own life. So it creates a 2-year waiting period. If a suicide occurs within those first 2 years, the death benefit isn't paid out. Instead, the insurer just returns all the premiums that were paid. After those 2 years have passed, though, the full death benefit is paid to the beneficiary. Okay, so we've spent a lot of time talking about the rules and the insurer's obligations. Let's flip the script and talk about your power, your control. Because a life insurance policy isn't just some static piece of paper, it's an asset that you own. And with that ownership comes a whole set of rights. As the policy owner, you are absolutely in the driver's seat. You're the one who gets to name and change the beneficiary. You can borrow against any cash value the policy has built up. You get to assign ownership of the policy to someone else if you want. You select how you pay your premiums, you can terminate the policy, you even get to choose how the death benefits are paid out. It's a really flexible asset, and you're the one in control.
And speaking of transferring those rights, there are basically 2 ways you can do it. The first is an absolute assignment. That's exactly what it sounds like, a complete and permanent transfer of all your ownership rights to someone else. The more common one, though, is a collateral assignment. This is a partial and temporary transfer of some rights. A classic example is using your policy as collateral to get a loan from a bank. You're just temporarily assigning some rights to the bank until the loan is paid off. All right, we're almost at the end. Let's talk about the ultimate safety valves. These are the final consumer protection clauses built into every single policy to give you total confidence in your decision. 10 days. Remember that number? 10. It represents one of the most powerful rights you have as a brand new policy owner. It's your ultimate safety net right at the very beginning. This is what's known as the free look period. As soon as that policy is delivered to you, a clock starts ticking. You have a set number of days, usually 10, to read through every single word. And if you don't like it for any reason, any reason at all, you can just send it back for a full refund of your premium. No questions asked. It's basically a no-risk test drive for your policy. So there you have it. The fine print in your life insurance policy, it isn't something to be afraid of. It's just something to understand. Because when you get right down to it, your policy is a promise. And the real question I want to leave you with is this. Now that you know what's in there, do you really know what it's promising you?